got the wrong idea of a recession. We're mentally scarred from 2008's crash. I was 3 years out of college. I just graduated from property economics. I was working in Tesco when the crash happened. I was working within their property department. I was involved in valuations, redevelopment. In 2007, it came pretty clear to me that assets were overinflated and the fundamentals of a lot of deals just weren't adding up. This did create some internal tensions for me. But about 9 months to a year later, we all know what happened. One of the biggest financial crashes happened, and property market prices fell year on year till 2012, when they hit the bottom of about a 50% reduction from 2008. Prices did start to rise again in 2013 and kept rising up until about 2019. There was a little bit of a slowdown, but then we had COVID. We had a drop in property prices by about 5 to 10% over a month or two, but then prices rose quickly again, and house prices have increased year on year ever since. So when we think of a recession, we think back to 2008, but really 2008 was a complete meltdown of the financial system that had lost its run of itself. And it wasn't really a recession, it was a great recession or a great crash. And we did have a small recession in 2019, but most people don't even remember that or didn't even notice it. So when we hear the word recession being mentioned by the government or media, we mentally revert back to 2008, to our underlying experiences there and what to expect. There's probably no doubt right now that we are heading into a recession, but hopefully not a crash. Many feel that we actually did need a bit of a slowdown, a bit of heat taken out of the global market, and a recession or a correction was long overdue. But what does this all mean for the housing market if we are heading into a recession, and how does it impact your ability to buy, or perhaps your thoughts about buying a house in the near future? For those who don't know me, my name is Fleming. I make property related content on this channel, so please show your support by liking the video and also subscribing to the channel. If you are wondering what might happen to house prices, there's no crystal ball, but perhaps we might look at what will happen and look at a few important considerations. Analysis of past US recessions indicated out of the last 9 recessions, house prices have only fallen in 2 instances. And the remaining 7, prices have actually increased or stayed reasonably steady. The 2 times the prices did fall was because they were major recessions or major crashes, and that was in the 1980s and the 2008 crash, which we've already mentioned. So a recession doesn't always mean that house prices will fall. And there's a few reasons for that. Firstly, you have to understand what the underlying cause for a recession is. In 2008, the crash was due to the money tap being turned off to an overflowing housing market, and once capital ran out, the market crashed. But this recession is not really related to housing, it's based on trade concerns. So the underlying cause will have an impact in terms of consumer sentiment towards housing. Supply and demand will impact pricing. Unlike 2008, we do not have an oversupply of housing, and we're not automatically running out of credit. Ireland has a major undersupply of housing. Demand is pretty strong, from 500,000 young people living with their parents. We have an increase in need of government housing, and there's still a lot of cash buyers out there. Demand will fall from some larger international investors as their ability to get cheap credit may actually dry up as well. The availability of credit is an essential factor to consider as well. There is a lot of cash in the market. Banks will likely be able to continue to lend, unlike 2008 when their legs were cut out from under them. It may become harder to get a mortgage, but even if the level of mortgage approvals drop by 20-30%, there's still not enough supply to actually supply the number of houses that are needed. So therefore, I don't think that's going to become an issue. While the average buyer may find it a little bit harder to get mortgage approval, the story will be a little bit different for developers. They'll find it harder to secure capital to develop private housing, and they may only be able to secure capital for government-backed housing, and this will reduce the overall supply into the private market. In recessions, central banks generally tend to lower interest rates to help stimulate the economy. This sometimes leads to an increase in demand for housing because of the access to cheap capital. This may not be a given this time because central banks will be a little bit mindful of the inflation we've just got over, and also a trade war could lead to more inflationary concerns. Government intervention during recession plays a major role. In 2008, we had NAMA, we had the IMF, we had increased taxes. I don't see that happening this time, but government will likely ramp up their spending towards housing, and this will compete again with the private market, reducing the supply, and that will have an impact on prices. The extent of what other economic factors or other economic influencers will have on house prices in terms of employment, tax returns for the government, trade, will also have an impact on Ireland, but in terms of how they'll impact housing, it's a little bit unclear at this point. While a recession does not always mean a fall in housing prices, housing and other assets tend to follow a similar projection of the overall economy, but because houses aren't that liquid, like stocks, sometimes their price correction never really happens. The impact of a recession on housing does depend on various factors, including the underlying cause of the recession, the interest rates, housing supply and demand dynamics, and government intervention.